None of the recent bank failures, especially in the US, the big ones, Silicon Valley Bank, Signature Bank, and First Republic, can be attributed to digital banks. And also, less than 5% of the world's neobanks, and I think there's about 400 of them, only 5% is profitable. Dharmesh, you have said that digital banking alone is not going to kill legacy banks, the incumbents, anytime soon. Why do you say that so confidently? You've put out a headline out there.
Come on, Efi, that's so obvious, is that, like, you've got the stats and the numbers, right? But, let's face it, what bank died because of digital? Because they weren't digital. Which bank died, right? Because of digital. Well, actually, I'm not aware of any that have died because they were not digital. So the facts speak for themselves that digital is not killing banks. Now, there may be some impact, yes, granted, right? And certainly neobanks like Monzo, Starling, Moniz, all gaining some traction, but not all of them. So when we go back to my initial statement, what banks died, it's only neobanks and fintechs that have died, really, and they were pure digital, and they died because they didn't get the traction, they didn't reach profitability, etc. Right? Now, some of these banks are going to get funded all the way through towards profitability, but it's going to be a very small layer of them.
It's what you say is interesting, and you're in the UK. For our listeners that don't know you, you have more than, let's say, you have 30 years. I'm not going to say more experience in financial services. You've worked at Lloyd's, you've worked at NatWest, you've been with Temenos. You are an entrepreneur, so you know that other side. You're not like an incumbent legacy person trying to support the establishment. You have been an entrepreneur, and you have exited 3 startups.
Yeah.
So you've been in both shoes, if you like, and I want to invite your unique cynicism to the table, and tell me why you think that incumbents, okay, they haven't died, but they've definitely been transformed in some way because of the existence or the proliferation of all these neobanks. How have they changed? And is the change positive? What do you see? And especially in the UK, which is a very particular market, right? With the 4 sort of large incumbents still dominating the market.
Right. I mean, look, back in '97, I put some of the first banks online across Europe, right? And during that time of the .com, right, there were a number of, what we would call neobanks or pure digital startups. None of those exist today, right? Even the banks themselves, Lloyd's, Halifax, the Prudential Insurance Company, they all launched digital startups of their own. They typically spent about £1 billion. None of those pure digital ventures, even from the incumbent banks, exist today in an operational way. Yes, EGG and IF have closed book sets of accounts still running, but these aren't banks that are taking on board any other customers. So, what we've learned is that right at the beginning of this kind of digital journey, when we were pushing out self-service, that banks were able to actually create their own, right? So, when we look at it today, the facts are, look, Monzo, fantastic turnaround in the last couple of years, right? T.S. Anil has done an amazing job. He's yet to hit consistent profitability though, right? And for that to happen, he's going to have to get into lending, right?
Yeah, yeah.
And, you know, for him to get into lending, he's going to have to raise some more money to back up his lending book. Starling, very fortunate position, you know, and please don't shoot me, but, you know, you did get backed, or Starling did get backed with government-backed loans during COVID, right? They went from lending less than a couple of $100 million a year to lending well over almost 2 billion, right? And you can afford to do that when you're not taking on the risk, right? And the government is taking on the risk. So Starling got a leg up in its journey in the lending game and reached profitability sooner than Monzo, right?
Yeah.
Monese has managed to capture a niche with 3 million customers, you know, targeting, you know, the gig economy, etc., right? But that's it. That's where, you know, we've got so many others that have tried to grow and become banks, but without getting to the difficult space of lending, none of them are really going to get to profitability very easily, right? And they're going
And that brings us to the Revolut frustration, right?
well, yeah, exactly. And, you know, it's very difficult to, I mean, it's easy to grow a client base, you know, with a heavy spend on marketing, right? But it's difficult to get real profitability without, you know, some serious margin in the product. At the moment, you know, they're getting fairly, you know, low margins on the kind of products that they're doing. When they get into proper banking and lending, then we may see where how successful they will be. But right now, it's a crowded marketplace with a lot of feature functions and not a lot of financial services in the traditional sense. Yeah.
That's interesting. And I must add that although I don't live in the UK, so I don't really, you know, personally experience the service and the alternatives that are offered there. But, you know, looking from the outside inside, it struck me that Chase's Neobank, you know, got the award, many awards of best digital banking offering in the UK, and we're talking about an incumbent, right? I don't know how it is in reality there versus the standalone challengers. What is your opinion?
I mean, they did very well in terms of their offering, I thought, but you know, again, it was a savings-led product, right? And you know, with headline rates, it's fairly easy to get, you know, a good client base, right? And I remember in the dot-com boom times that, you know, we anticipated, you know, this younger generation to jump on board with internet banking, but it was only the headline savings rates that was actually attracting the older generation that actually had money to save, right? So they weren't necessarily getting their target audience, the ones that wanted to lend and borrow because they wanted to get onto the ladder. They're actually attracting the generation that already had their houses and were close to retirement and paying off them, had already paid off their mortgage, let's say, right?
Yeah.
So it's interesting, you know, what the growth strategies have been, but fundamentally, you know, I worked a long time when I worked at Lloyd's, you know, Sir Brian Pittman and I had the fortune to meet, and he said to me, you know, banks, the only way that they will make money is two things. One is that they've got to lend, and the bank rate, right, the external rate has to be at least 3% for banks to make decent money. And what have we seen in the last few years with high inflation, etc.? Well, actually, banks getting back to greater profitability because of inflation and the bank rates rising. So he was absolutely right.
Absolutely right. And isn't it ironic that all these challenger banks have been essentially using the same methods of customer acquisition as the incumbents? Am I correct, or did I miss some innovation in the way of acquiring customers? Because this type of thing of, you know, offering higher rates to get, you know, new customers is an old trick, sort of.
Yeah, I mean, I think I think some of them have done pretty well in creating a brand in, social media. I mean, Monzo stands out for that. Starling stands out for that. Moniz did well, from doing that. So, they have come in and, with digital marketing as a strength, because that's far more cost effective than traditional marketing, which the bigger banks have, invested quite heavily in. So that's about the only difference. But, everything else is about giving stuff away, which is, cutting into their margins. So whatever they're saved by running operationally more efficient, they're actually spending on customer acquisition.
Yeah. I just actually saw on LinkedIn a post by Marcel Van Oost, who was sharing one of the early advertising tricks that the Revolut used, and part of it was offering free transfers. And somebody commented, yeah, you're giving something away, and if you're running out of money, yeah, that might seem like a growth hack, but how long can you do it if you don't have enough funding?
Correct. And that raises another point, right? Even with the headline rates and even with giving stuff away for free, banks aren't under threat, because there is only, and this I learned from another a friend of mine who's the CEO of a big international bank. And I said, look, TransferWise is going to eat your lunch when it comes to Forex. He said, no, that's not going to happen, Dharm. He said, we've already gone through our client base, and less than 5% of our clients are using TransferWise, right? Because obviously they've had to move money into TransferWise before they can do any kind of Forex. So they know exactly how many of their customers they've lost to TransferWise. And he said, well, when we looked at those customers, actually, these were the ones that we'll always lose, because they're rate chasers. They're the ones that go to the cheapest, fees. They go for the highest saving rates, and they'll move around. They're not loyal to anybody, and we can't offer the best for them all of the time anyway, right? So there's no point in competing for that small percentage of our clients that aren't going to be loyal to anybody.
Small percentage, and I assume also the size of these transactions is not, in the thousands of dollars.
Correct.
I don't know. I mean, there's obviously a customer base that is benefiting, but it's not not moving the needle of the profitability of these large incumbents.
Correct. And what we're also seeing is this kind of layering where even those people that have moved to banks like Monzo and Starling still have a relationship with an incumbent bank, right? And let's face it, if I look at the number of things that you can do with an incumbent bank, right? Firstly, the product range, and secondly, the processes, right? Then incumbent banks are under no threat for quite some time yet, because none of these guys have got the breadth of products, the breadth of reach in terms of wealth, corporate and retail banking, international banking. If I take funds transfers and stuff like that, what about the stuff behind it that supports it? So what happens when somebody passes away? Can I easily speak to the bank? Do they have a process for dealing with people like that on an online fashion, right? And for some things like that, do you really want to deal with it online, or do you want to speak to somebody, right? And again, there's a whole lot of banking that people want to do face to face or with an incumbent bank, because they know that there's some backing behind it, right, and some surety. Like if you're going to transfer 50,000, let's say, to buy a house as your deposit, do you want to hit that button? Are you absolutely sure? I'm a seasoned banker. I still went into the branch, right, to get it done, right? Because
there's
I'm
a
asking the
bit
bank
of
to take responsibility.
yeah. I I was discussing with an entrepreneur here in Switzerland who uses Revolut for, you know, the business banking, and this is not an early stage startup. They have, I think, 85 employees and so on. And I asked him, I said, do you realize that this is not a bank?
Yeah.
And it's like a lot of people don't understand what that means until something awful happens. And you know, if you're doing your business banking, or as you said, you have a mortgage or mortgage payments or those types of payments, you really want to have what is recognized as a trustworthy brand. And what's striking is, I mean, I have children in their early 20s, 21 and 23. And what strikes me is, of course, they have, you know, these apps, the Revolut and the different digital apps. And so do I. But they also have the relationship with UBS.
Yeah.
Right? And they want the UBS credit card. I don't know what it is. It's like, you know, they want, it's a brand name also.
Yeah. Correct. And it's been around for decades, right?
It's been around for decades.
And you know what's also interesting is that, you know, they probably looked at who you banked with, or they've had that conversation with you, because for most of the young generation, the place that they mostly go to is friends and family for advice on financial services. They don't necessarily go to the institution themselves.
100%, 100%. And having said that, I want to flip it on the other side and look at, okay, the incumbents, whether it's in the UK, clearly they have been pushed because of competition to transform, digital transformation, another umbrella term. And you know, it can be for different reasons. Where do you see that? I was really intrigued by your recent article where you cynically said that they are reinventing the past with new technology rather than really reinventing themselves for the future.
Yeah, I mean, look, you look at what's actually happened, right? Look, you know, firstly, it's not like I want to defend the banks, because I want them to provide a better service and future-proof for the, you know, for my needs as well, right? But inherently, they are based on legacy systems that have been around for far too long, right? And it's not because the technology's moved that they have to move, right? But let's face it, these systems were developed even before they had branches, right? So, I mean, even before they put technology into the branches, first the accounting systems were done on mainframes, and you know, data was sent through terminals, right? And you know, accounting was done, and they replaced the ledgers, the paper ledgers, right? Now, those systems on the mainframes were there, you know, enough scale for people, you know, doing terminal-based access, so a set of staff, right? Now, then we started push technology into the branches. That's when I started in a bank. We started put the very first networks and PCs into a branch, right? And we started to distribute some of this processing.
This is when? This is
in the late 80s.
Late 80s, I would say early 90s, yeah.
In the PC, you know, kind of generation, right? And now we had more staff. But even then, you know, you could say, well, when we rolled out branch technology, we rolled out 40,000 PCs. That's 40,000 users then, let's say, right? And the mainframes coped with that, right?
Yeah.
And then we took some of that load off by centralizing the processes, some of the processes from the branches into centralized service centers and then call centers. Now, what's interesting is that many of the call centers decided that actually we need to have our own system, right? So yes, they could get the up-to-date balances, but for processing customer data, etc., they had their own system because, you know, for a variety of reasons. One, this was extra load on the mainframes, and two, that, you know, this was somebody with a separate budget and needed to get the call center up and running. You know, didn't have to deal with the head of retail banking. So, you know, this silo is formed, right? And then along comes the internet, and in the early days of the internet, it was okay because not, you know, it took almost, you know, a decade for banks to get more than 50% of their customers using the internet, right? It's actually about 15 years, right?
Yeah.
And in that time, you've got 15 years to put in a layer that kind of helps you manage the load and the performance of, you know, your growing internet base. It didn't happen overnight. I remember for the first 4 or 5 years, it was an amazing achievement for a bank to have 1 million people signed up for internet banking, let alone, you know, using on a regular basis, right?
Yes.
But the
Yes.
systems were built, and, you know, there were some layers of adaptation to allow them to scale. And what's happening now is, if we look at things like banking as a service, when banks are doing that, they're not using their legacy systems, right? They're actually acquiring brand new platforms. Why is that? Because they need a platform that will scale for brands bringing on, you know, millions more customers, right? And that will allow them to scale better, right? So it's not just
Sorry,
about
are you, Dharmesh, are you saying that they're already doing it, or that they should do it for banking as a service?
well, they're already doing it, because if you look at NatWest and Box, they bought their platform from Vodeno, right?
Okay. Okay.
Um,
Okay.
and then, you know,
So it is a separate core banking system.
yes, right. And so the other thing that, you know, with legacy systems, when they're a monolithic system, right, which they are, this is why it's not because the bank doesn't have imagination and innovation. It's restricted because, firstly, you know, some of the platforms weren't built for flexibility in product definition, right?
Yeah.
So they don't have the flexibility to incorporate new things like bundling or rewards, etc., right? Second thing is that any kind of small change, and you'll have seen this in the last year, it's so evident. All of the neobanks, Monzo, Starling, etc., increased their savings rates almost immediately as inflation took hold. The incumbent banks have struggled to do that because even a small change like a rate change means that you've touched the line of code in this monolithic application, right? Which now means that you have to redeploy the monolith, all of your code, so you now need to be sure that whatever you touch, you know, you've tested, right? And that it has no impact on any other system. And that's why banks don't really roll out changes more than once a quarter or once every half a year, right? And that's why we think they're slow, right? So it does come back to their legacy systems that's why they're being held back, right?
Yeah. Yeah. Yeah.
And
So,
when it
so
comes to the digital stuff, that's what I'm saying is that, you know, basically what they're doing is just supporting their existing products, etc., but with a web or a mobile front end, right? If you want to reinvent your business, you have to have a new platform because you want to roll out new products, changes faster, and you want to be able to scale. And that's why, you know, anyone with a BaaS kind of proposition has bought one of the modern core vendors solutions, you know, either
so how many, I mean, how many, like, what is the adoption in the UK of the incumbent banks of these new core banking systems? Like you gave the example of NatWest in a box, which has a specific purpose, right? It's not replacing the entire bank, but do you anticipate that NatWest and the likes are going to be doing more of this, or growing? Or where is the market going?
So other banks have already done it. Standard Chartered have done it in Asia, you know, with Nexus. there are banks, Green Core have done it in the US, etc. So, you know, the BaaS providers have been growing slowly in the background. You're not going to get every single bank jumping onto the BaaS route necessarily. You don't see that happening with Lloyd's or Barclays at the moment. HSBC are offering it for their corporate customers, so they've already gone into BaaS. But you know, inherently, what's actually happening is BaaS is the enabler for somebody to do embedded finance, right?
Yeah.
And that's where I see how banks will better address, you know, innovation, because the person doing embedded finance already has got a revenue stream. They don't have to be profitable like the neobanks, you know,
Yes,
from
it's
the
not a
financial services.
standalone business.
Exactly.
Yeah.
And what they're really doing is using the finance piece to smoothen out the journeys, to make customers more sticky, to gain more intelligence about their customers. They're doing a whole load of other things that they can afford to do, right? Which banks can't, right? Because they've already got their profit line from their existing business. Yeah.
So do you think that in the Goldman Sachs Apple card case that the banking as a service to Apple is done by the cloud native part of Goldman and not the legacy part of Goldman?
I don't know about Goldman's technology. Not a lot has been said about that. But you know, to support a client base like Apple, I would imagine that they've got a modern technology approach to the core.
Yeah, yeah, and given all that they have been trying to do in the fintech space, from Marcus and also their transaction banking offering through Volante. I don't know how it's doing, but it was launched, it's there, so I assume that they would be leveraging all this. Dharmesh, any thoughts around branches and what's going on, especially in the UK, where there's a lot of controversy, I guess, in terms of the closing of branches. I don't know if it's worse than percentage-wise than the US. I haven't seen any numbers, but what are your thoughts around that?
I mean, it's very difficult to argue that, you know, banks are dying a slow death, and that's, you know, partly done by, you know, the unions and the regulators, etc., saying, look, you can't just shut all these operations down. So I think it's been a long time coming. You know, you look at bank branches, they aren't that busy necessarily, right? Even the strategy by Metro Bank to only open branches in, you know, city center locations so they get the commuters to kind of use theirs hasn't necessarily made them a winning formula, right? That being said, you know, that doesn't mean that every single branch will not exist, but I do think a newer model will emerge, and we already have a couple of plays like the post office and another that offer, you know, multi-bank branching, right? So they're not reliant on one brand,
Right?
you know, to fulfill their transactions, etc.
Yeah, but going back to what we said before, that there are certain services like, mortgages and wealth management and so on, where consumers want to speak to a person and not, do 3 clicks and one swipe, because for all sorts of reasons. But you're saying that it doesn't mean that we need to have the physical branch for all those, but we do need to have the person accessible online at least. Is
Yes,
that
yeah, absolutely, absolutely. And you know, again, in defense of the banks, they have been innovative in bringing banking closer to the customer, not only from a self-serve perspective, but we've seen banks in Europe that have trialed, you know, banking cars, you know, like vans that go out and they have an ATM on the side and they have staff that will go and visit people and make, you know, collections for deposits or drop off, you know, cash where they've ordered it, etc. Right? So we've seen drive-through banks, you know, they still exist in the US. We had some trials in the UK, didn't really work out. So banks have tried lots of different things about, you know, to try and bring the bank closer to the customers. But at the end of the day, what we're starting to see is that digital is proving its value in allowing us to, you know, have banking at our fingertips.
Yeah, interesting how everything's interconnected and transforming and impacting each other. The last question I want to ask you, Dharmesh, is I know that you are passionate about composable banking. Can you tell us briefly what that concept is all about?
Yeah, sure. I mean, we've had, if you're a technologist, right, you have a natural tendency as a programmer to kind of not want to write the same piece of code more than once, right? If you've written it well, you want everyone to use it because, you know, it's the best piece of code that you've done, right?
Right.
In the past, we had things like components, right? Components was a subroutine or, you know, a section of code that you could say, well, okay, everyone can call this routine to do date validation or interest rate calculation on a mortgage, right? The problem was that in the old world, this code had to live together in one thing and be compiled and deployed as one thing, right?
Yep.
As things progress with client server, you could break that up into physically separate bits of code that ran separately, but they had to run on the same machine, right? So as long as you're on the same machine, then you could share code between different programs running on the PC, typically Windows or something like that, right?
Yeah.
Then we had the network, and we were starting to run things on the same network, but across from different servers you could call code, right? But then the internet came along, and now we can run. So one of the challenges when you're on the same network is that the machines have to be the same. They all have to be running Windows, or they all have to be AS400s, or they all have to be IBM 3090s. Otherwise, you're going to have this expensive kind of integration to do, right? And it's all different depending on the types of machine that the code is running on, right? So, you know, the internet has kind of solved this problem, and it's taken a bit of time, right? To kind of say, well, look, if you wrap your code with this layer, like an API, right? And, you know, the underlying enabling technologies like REST underneath it, it means that you don't have to worry about what kind of machine that this code is running on and where it exists, right? All that you know is how to get at it, right? So now we can componentize this code, typically called a microservice, right? And there's a standard interface to it, an API, that we can address it. And now, instead of building monolithic applications, you know, even as a set of components, we can actually build them as separate individual components that all talk to each other when you want them to. And the important thing is they can also be deployed individually, right? Now, this is my point about incumbent software companies, is that you can't just, and you know, there's an article I'm doing soon around Watson X, which basically migrates COBOL code to Java, right? Which is all fine and great. It gets it on, that's reinventing the past with new technology as well, right? Because it's saying that the way that the system worked, well, my problem is COBOL, therefore I'm now going to shift it to Java. I've solved the problem of what skills do I need to maintain this? But I haven't solved the problem of it's still a monolithic piece of code, albeit in Java now, right? If it's a monolith, I still have to be able to run the whole thing rather than the individual services in the new architecture. So the new world is this acronym called MAC, which is, it needs to be microservices based. So individual small bits of code that can be called from anywhere. It needs to have a standard interface through an API, right? Mm. It needs to be cloud native, right? And, you know, that means both scalable from a hardware perspective as well as a software perspective, right? And each of those individual services, I can fine tune the resources I give to it, right? And then headless, because nobody wants the vendor's UI. You want to build your own UI, for the call center. Or
Does headless mean?
headless means that it doesn't have a user interface.
Okay.
Right. And that means then you can put your own interface on top of it and design your own branch application or call center application or mobile banking application.
You make me wonder, Dharmesh, how many boards at banks or financial institutions understand all this, or have somebody who understands all this and its significance, and can explain it to the board. I bet.
Look, I mean, I think the you don't have, as a board member, you don't have to worry about everything, right? But what you do have to do is to understand what is holding the bank up from innovation and agility, and really moving forward to new business models, right? And
Yes.
that is their old systems, right? And the sooner that we can break free of this constraint of being able to only make changes once or twice a year, and then not having the ability to, let's say, more and more software is going to be AI enabled, right? So instead of us coding business logic into the program, we're going to ask the AI and say, well, look, instead of me defining a set of rules that defines credit risk, let's say, we're going to say, well, look, is this customer okay to lend to? You've got access to the data. You know what makes a good payer of credit. Should I lend to them? So I don't have to work out the rules for myself.
Correct.
And so, if you've got a legacy system with hard-coded rules, you're not going to have that kind of flexibility. So you're going to want to move to this new world where you've got these small components, AI enabled, and much more of flexibility and agility. That's all you need to understand from the board perspective.
Well, thank you, Dharmesh. These were great insights that you shared with us. And before closing, a little personal question. What is your favorite way of gaining these insights and forming your views? What do you do? Do you listen to music? Do you dance? Do you read books? What do you do to reach?
If you've seen me dance, I definitely don't. But I would say that I'm not a creature of habit of doing one thing. So I tend to surf a lot. I tend to use LinkedIn a fair bit. I tend to speak to a lot of people because there's so much more you can get out in terms of intelligence. People like yourself, to watch you, to hear you, to speak to you. You get more information that way.
We used to
than you
call
will from
it
reading
color
stuff.
on the trading floor at Salman Brothers. We used to call it color, call the brokers, call the clients to get color.
Yeah.
It's like what we people get by the conversation, right?
Yeah, I mean, I think it's like osmosis as well. You have to be in the environment to actually really feel what's going on. And I think during COVID, that was difficult to do even with Zoom, because I think it does need a mixture of, approaches. Sometimes it's going to an event and really, it was interesting. I went to an event this week on AI, and you could feel the interest in the audience. It's not something that comes across in a camera or in an article, but
Oh,
you could
in an article,
actually
exactly.
feel it. And then when you speak to people, you understand their fear or their concerns or their excitement around the technology, and it does do exactly that. It adds the color that I think is very important to understand, where we're at with some of this stuff.
But I meant also beyond the fintech and technical stuff, on a more personal basis. Before recording today, you told me about your passion with running. So please share with us. It's very inspiring.
Oh, okay. So, yeah, I mean, some people that know me know that I do ultra marathons, and I've done 100-mile races. I've done 5 days in the desert, carrying my food and clothes, marathon every single day. But I think the time out it gives me, both in training and doing these races, allows me to assimilate all these things that are very disparate, because I read very broadly. You know, I like to see what's going in healthcare, what's happening in sport, what's happening in, you know, the retail industry, etc. And because these things at some point will collide and merge, and you start to see trends and patterns rather than just reading, you know, in one industry. It gives me a broader vision on stuff. But, you know, that disparity of all the sources and all the industries takes some time, and running gives me the ability to kind of just let that percolate through my head and to assimilate patterns and thoughts around, you know, what's happening next.
Wonderful. I love that perspective. I'm a big believer in cross-industry, interactions, because you get a sense of the similarities and differences of challenges and what's going on there. And these days, I believe with these technologies, the advanced technologies, we are much more interconnected in terms of the trends. And it doesn't pay to stay in our area of specialty and focus, although we have to go deep. But I guess the running helps to go
Yeah.
deep, to eliminate the noise. Dharmesh, thank you so much again. It was a wonderful discussion.
Oh, thank you, Effie. And you know, it's an honor for me to be on your show. I've been looking forward to this. So it's a real pleasure. Thank you.
Thank you.